the Fed do? I mean, the Fed came out with such a massive bazooka, cut rates to zero, more QE. What's left in the toolbox?
Right. So the Fed essentially took everything that it had in its box from the financial crisis, consolidated everything into a Sunday pre-meeting rollout and put everything really on the table. QE is out there, emergency lending is out there, and of course the Fed funds rate has been smashed down to zero. So essentially the Fed is attempting to do everything it can, put it all together, and hope that this could have some kind of movement. Well, of course, we, woke up today, markets opened, and we saw that, of course, QE is not an infectious disease response. So monetary policy is going to be limited in terms of what it can do. Now, that said, you do see with some of the moves that the Fed made regarding, in particular, emergency lending, an attempt here to try to give firms the ability, banks the ability to be more generous in terms of forbearance, in terms of potential delinquencies and defaults. It's really up to the banks to see if they can aggressively push this out to their borrowers so that borrowers get a bit of a breather here and are able to avoid some of the hard decisions that could come from having to lay off people. And then, of course, we know what happens, because if that happens, then we do have a deeper, longer recession. So this is a tough moment. There's more I think that the Fed will do. I think we are in a kind of QE to infinity kind of moment because, as you can see, there's still a lot of support that the repo market needs, and the Fed is continuously going in there, particularly when it sees bizarre behavior on the Treasury side.
So, I mean, what we keep hearing, Sarah, is this is not 2008. This is not a banking crisis. The banks are much better capitalized. They're in better shape. But if you look at some of the action for the bank stocks, I mean, they're getting pummeled. Obviously, not like the financial crisis, but there still seems to be some underlying concern here. What kind of shape are the banks going to be in after this is all over?
That's exactly right. It really doesn't matter kind of what the source was. So the source of the financial crisis was perhaps different kinds of trading. This isn't coming from trading, and yet you still see the same kind of stresses that are ultimately going to land with the banks. So essentially, whether or not it's a financial crisis or not, I think is really just semantics because, of course, there is a significant liquidity crunch and, of course, the need for significant forbearance.
In your view, is fiscal stimulus the ticket? What needs to be announced on that end?
Yes. Fiscal stimulus is going to have to be the ticket, and I think it's going to have to be a significant kind of fiscal stimulus. It's going to have to almost be in the range of something that is almost like we got to do something to bring out medical personnel from the sidelines, give them support. We have to do a lot to actually step in to substitute for what is going to be significant missing consumer demand for hospital beds, demand for services, demand for respirators. Those kinds of pieces are really going to be necessary, and it's going to have to be the government that stands in and actually begins the purchase of those significant supplies. So I think that is what Americans are waiting for, and of course we're going to have to do something to help people who are facing significant hardship because their hours have been cut or they're starting to lose jobs. So we're going to have to do something more on the unemployment insurance side, expand it to be more than just after you lose your job, but what can be done before you lose your job, because of course people are having to step back from being able to work and bring in money, and yet the bills continue.
Sarah Bloom Raskin, thank you for joining us.